Hello, everyone. How are you all? Good. Let's talk about Micron Technologies, ticker MU, the chip maker. I just want to do a video on it because it's trading at a lower valuation than its peers. So it's trading at a PE of 7.34, which is better than all its peers. So could be undervalued at this time. So let me read you this article concerning Micron. Oh, before I get into this, if you wanted to know what I did with CS Disco, all the talk over the weekend, I bought at 1364 and I sold it today at 1387. So a little profit. All good, all good. Derp, but whatevs. Let's talk about Micron Technology. Micron has returned to the media spotlight after the recent outlook revisions. It seems analysts are keen to call a negative financial performance trend and imply that the stock could suffer. However, in order to have the full picture, we need to compare that to the fundamentals, which is good. They have great fundamentals, possible offsetting factors, and the current valuation of the company. Like I said, the valuation is lower than its peers. When we analyze the fundamentals for Micron, we see a strong company with implied long-term growth, backed by government grants and capital investments. We will review some key fundamentals for the company. Micron has been steadily building up a cash balance, which gives the company safety position, and is precisely what investors would like to see in the event of a demand decline. The company has a cash balance of $10.22 billion and $10.227 billion and total debt of $6.03 billion. Having more cash than debt decreases the risk in downturns. Additionally, the debt to market value of equity for Micron is about 9%, which is on the low side for a company that is profitable and expected to take on growth CapEx projects. Dividends and growth. The company has a low 0.75% dividend yield, but there are reasons why that may be great for investors. First, Micron is utilizing a mixed dividend and buyback approach to return capital to investors. In the last 12 months, the company has paid out $2.8 billion in buybacks. Come here, baby. In buybacks and $506 million in dividends. This makes the cash adjusted for buybacks payout ratio 68%. While the dividend appears small, it seems that most of the return for investors is provided via buybacks. Second, this leaves some... Hold on. Let's see what little baby wants. Ready, sweet? Okay. Here's the girl. Second, this leaves some 30% of the cash retained in order to finance growth projects. The company is planning a $40 billion U.S. memory chip manufacturing facility investment over the next decade. This is within the projected $150 billion of global planned CapEx investments for this time frame. This facility will be considered a strategic investment and will be partly backed by the grants from the U.S. CHIPS and Science Act. It seems that Micron is expecting a decade-long investment-driven growth journey, which is aligned with the U.S. interest to bring chip manufacturing back to the U.S. Let's see. We can see that analysts have updated their forecast on the 9th of August. And while they expect a decline in top and bottom... Wait, hold on. Okay. Micron's future outlook revisions. On the 9th of August 2022, Micron issued a future outlook revision, citing a demand decline for DRAM and NAND for fiscal Q4 2022 and fiscal Q1 2023, implying that they expect their memory chips to be less in demand as people cycle away from buying PC components. For context, the industry saw the surge in the need for PC components during the pandemic as consumers were spending more of their time at home. Additionally, the tech boom drove demand for Bitcoin mining, from which semiconductor companies also benefited by selling processing units used in mining. Now, as the market normalizes, consumers are shifting their focus away from PC components, and this is reflected in the reduction of demand. However, this decline seems to be temporary, as developing technologies will still make these products attractive, and cheaper parts open up lower income demographics. In the release, the company changed Q4 revenue guidance from the previous $7.2 billion to about 6.8 or less. They also indicated a meaningful reduction in planned capex for fiscal year 2023. Negative free cash flow in fiscal Q1 of 2023 and sequential declines in margins. On the other hand, there is a possible risk reduction tailwind that may sustain the level of the stock price. Some analysts indicate that the Fed will issue a September 0.75% rate hike and pause thereafter, upon which the market may react with higher valuations for equities across the board. This comes after the latest CPI results, which saw a decrease to CPI from 9.1% for June to 8.5% for July. Government backing and growth capex, long-term semiconductor demand, and a settling down of inflation looks good. And the company's undervalued. So tell me what you think of Micron. Trading right now at, looks like it's 64.58. Yeah, okay. So tell me what you think. Do you like it? Do you not like it? Let me know. All right. Have a great day, everybody. Bye.